About 2 weeks ago, the world's first climate-focused guarantee company celebrated big fashion, in the market closing ceremony, their launch, at the London Stock Exchange. Yeah, this is yet another attention-grabbing event that, yes, requires to be celebrated. But you're probably wondering, so why does it need to be celebrated? And what about the $1 billion company pledge that was made on that day? That is what I want to talk to you about. So definitely do stay tuned. Hello, everybody, and welcome to you. So my name is Tony Tiu. I'm the founder and CEO of Renewables in Africa. If you don't know us, what we do is very simple. We raise awareness about renewables energy in Africa and across the globe. And let me tell you one thing. So if you are a developer, a project developer, if you are an EPC, if you are a supplier, if you are an investor and you're looking to invest into the beautiful continent of Africa, or maybe looking to expand into it, definitely reach out because I want to show you how you can 10x your return on investment. So, I want to come back to the topic of today. So, I'm talking about green guarantees in here. But before I actually step into that, talk more about the green guarantees for you to understand what's all the fuss about it. So, why is it so important? Why do we need it? So let me come back a little bit and talk about climate finance because if we talk about green guarantees, for people that may not be, let's say, conversant with this kind of topic, you probably don't know yet that this is actually part of climate finance. This is what we call climate finance, yeah? But then, what is climate finance per se? Yeah, and why is it needed? What is the problem that climate finance is actually uh, uh, tackling? So, if you know, just let me know and in the comments, that'd be appreciated. But climate finance, it refers to all the different financial resources, and instruments that are used to support action against climate change. And climate finance is critical to addressing climate change because of the large scale investment that are needed, and those investments are needed to transition from a low carbon global economy and to help society to build resilience, but also adapt as well to the impact of climate change. And climate finance, it comes in different formats, right? Different form from different places. It comes from public sector, it comes from private sector, from national, international stakeholders, bilateral or multilateral arrangement mechanism is different. Yeah, it also can employ different instruments. So you have grants, you have donation, you have green bonds, you have equity. You have debt swaps. Yeah, you have concessional loans, and you have guarantees. And guarantees is actually the object specifically of today of our conversation, and this is where we want to spend some of our times. And it can be used, those guarantees, for different kind of activities, whether you're talking about mitigations, adaptation, but also resilience building. This is what you need to know about climate finance. This is roughly what we actually referring to when we talk about climate finance. And you have multiple uh, lateral funds that actually have been created. And what I'm going to be doing actually in here, I'm going to be showing you just there, just looking there, just, on the bottom of the screen, some example of those funds that we talked about here. So you have as well, obviously, the Green Climate Fund, GCF. Many of you may already be accustomed to that. You would have heard about it. So I don't know if you're familiar as well with the Global Environment Facility, the GEF. This is another facility that is actually tapping into a multilateral fund for climate finance. And you also have the adaptation funds. And all these funds, they were established, throughout the years, as financial instrument by the United Nations Framework and Convention on Climate Change, UNFCCC. And what they do is they provide resources to developing countries, helping them to actually combat climate change and also to mitigate and adapt as well this phenomenon. This is what those funds are there for. Yep. But then the question becomes, we understand that the climate finance, we're essentially looking to address the challenge that is posed by climate change. That's for we need finance for that. That's what it's addressing. But what about green guarantee finance specifically? But maybe before I tap into the green guarantee finance specifically, so let me show actually a quick report that I have in here. And this report was actually produced by a company that is very well known in the space. If you know them, it's Climate Policy Initiative, CPI. So you would have heard about them. And what you see in this document, just for you to walk through that very quick. By the way, it's available for free. So you just Google it or write to them, send them a message. They can send you this report. And what this report has been doing is been looking at the last decade, between uh, 2010 and 2020, and looking at obviously climate finance, how has it been evolving, and where are we, roughly speaking. And this is just one of the tables that I found there. But the reason I found it interesting because you also explain why we need climate finance, where we at really. So essentially, what you see in here, so I don't know if my cursor is visible. We're talking about the implementation of the Paris Agreement. You have the scenarios that have been designed in order to meet the Paris Agreement. You can see there are different type of scenarios. You have the lower bound, average, upper. And what you see when we're tracking, obviously, the level of finance that is needed to tackle that and what actually has been deployed in practice, you could see the investment in terms of $1 billion per year. That's 2019, 2020. You can see the climate finance we're talking about, even comparing that to the lower bound, right? Let's be very, very conservative, yeah, here. So lower bound, you could see that, for 2019, 2020, okay, that's about 4 years ago, but I promise you it won't be significantly different, yeah? But the climate finance, we're talking about what? Something like $653 billion. And what is needed was almost 10 times that, but this at least 7 to 8 times that. That's what it was needed, yeah? And that climate finance is actually split between obviously mitigations, which is receiving most of the money, and actually the adaptation, about 49. You can see as well clearly adaptation, which is all everything relating to what is already occurring and how people could already cope with that. And as you know, this has been a topic of recent years where people are saying, listen, this is already happening, right? There's already some irreversible phenomenon, happening. So we need to have a lot more money to be able to cope with the changing climate in the changing world. That's one of the reasons the adaptation fund has been increasing, but to account of many people, still not where it should be. But that's just one side of the equation. But I wanted to share with you in here is actually the climate finance that is needed compared to that is produced compared to what is needed. You know, it's far from where we need. This is the reason we're talking about the climate finance. That's what we need. That means that we need to have a lot more specific investment, focusing, targeting, on taking actions against the the climate change, right? So mitigation, but also the the adaptation. And this report actually shows that very well, right? So this is why I wanted to show you that to respond to the question, why do we need climate finance? What is the problem that is being addressed here? Problem is we've all recognized the climate change. We've all talked about the Paris Agreement. We've all talked about the action that needs to be taken to the 1.5 degree. Now, how do we make it happen? We need money. So what kind of money is needed? There have been some reports coming up showing those different scenarios. We went for the very conservative one, which is about 5,000 billion. All we could do was only 653. Yeah, so that's what you could see. That was as per 2023, as per 2020. So that is the reason why we needed the climate finance. But now, more specific, now the question becomes, okay, what we're talking about today, it's about the green guarantees. So what is the need for the green guarantees within the climate finance? That's another question that obviously uh, needed to be addressed, and you need to understand that before you understand obviously what we're going to say later on. That's why I'm commenting that. But again, I'm just going to share with you another set of data here. But what the data is also saying, it's actually, unfortunately, First of all, the money that is needed globally, to tackle the crisis, is not enough. Everybody recognize that. On top of that, that money seems to be just concentrated on few hands. Yeah. So that climate finance, it's essentially, in Europe, and also Americas, in North America, and only some places in emerging markets, essentially China, if we can say so. So other places that seriously requires that. In fact, those places that actually even suffer the most actually don't get a lot of financing. Yeah, and for what reason? So I'm sure there's many that we can mention in here, but also to account for many investors, this is also because there is a perception of risk in those regions that is not always, let's say, accurate. However, the perception is there. So the reason that the the green guarantee exists is to actually plug this gap so that you can actually pull the money from global market into those emerging markets in order for a capital to flow and those places being able to deploy action that is needed. But to respond to that even better, so what I have for you in here as well, it's another video, the short video that actually presents what the GGC, the Green Guarantee Company, is doing, and you understand it a bit better. But before even I dive into that, I just want to say that here. So while we're having this conversation that I'm hoping you're finding interesting, and I'm very, very happy to hear your own opinion. So I just want to sort of share a little bit of feedback for myself, saying that I have had the opportunity through my company to contribute to a project from the Green Guarantee Company. So obviously, as it was still developing, where they were looking at a number of countries, they were looking to deploy their solution into, and that was part of the first country. So we've obviously analyzed one of those countries for reason that I'm sure you would understand. I can't share the name of this country, but let's say that yeah, we've had a look at that. We had a good conversation meeting with the team. Hopefully, we found it was constructive. But it's good for us to see that now, things are taking shape and they're moving forward. So we're not here just to criticize for basically for pointless positions, but just to have this constructive conversation to see how we can make things even better. Okay. Anyway, let me back into the topic. So what I wanted to do in here is to share with you the video regarding the green guarantee companies, to see so that you can see what is that they're doing, and after that we can talk about the pledge that they've made and figure out whether or not it is fit for purpose. So are you with me? I'm sure you are. So let's have a look at the video. The video is about 2.5 minutes, a little bit less than that, yeah. And after that we can have that interesting conversation. One second.
Large climate infrastructure projects struggle to raise affordable and patient debt at scale outside global capital markets. The green bond market is growing exponentially and could offer an alternative, but remains an underdeveloped opportunity for emerging markets outside China. This gap is driven primarily by perceptions of the risks associated with climate investments in developing economies. If this barrier remains unaddressed, the Global South cannot mobilize the capital it requires to meet its climate goals. The Green Guarantee Company, or GGC, is the first specialist guarantor for emerging market climate adaptation and mitigation projects. Investment risk is addressed through a full guarantee in hard currency, regardless of the default cause, and investors receive all payments per the amortization schedule. To qualify, the debt instrument must be certified against the climate bond standard. In the pilot phase, GGC will target South Africa, one of the world's most carbon-intensive emerging economies, requiring $250 billion for energy transition alone. Then, GGC will expand to other large emitters, Brazil, India, and Indonesia. At scale, the instrument could reach 20 emerging and frontier markets.
we are looking to help the populations of developing countries that are most at risk from climate change, helping them to adapt and to mitigate the impact of climate change on their lives.
GGC is expected to unlock access to $10 billion in climate capital over 10 years, accelerating sustainable infrastructure development. The Green Guarantee Company is an essential addition to the global financial ecosystem, unlocking access to climate investors in an accessible, affordable way for credible borrowers in emerging and frontier markets.
Okay, okay. I think you've been able to have a brief presentation of what the GGC is, so the Green Climate Fund. So definitely, I would invite you. You haven't found out about this company just yet, to go for yourself and visit what is that they're doing, and that'd be brilliant. In fact, what I can even do very quickly, just to re-explain very simply, which even though I believe it was okay. So the whole idea about the Green Guarantee Company is to provide guarantees to some projects so that they become more attractive for investors. Because what's happening is those projects happening in emerging markets, right? And in some emerging markets, you can see there's a lot of risk that are perceived by investors, and those investors are not necessarily interested in to move ahead, because and the type of investor we talked about, we especially talked about sometimes large investors, institutional investors, because the one thing I may have not mentioned before is, from the climate finance, that the whatever amount that is actually agreed, right, or decided, that is needed every year. And IFC, for example, recently was talking about 3 trillion globally that is needed between now and 2030. But more importantly, what they also saying is actually a big part, a big proportion, a big chunk of it should be coming from the private sector. But in the map that I've shown you early on, I don't know if you can still come back to that. If you could see, so that's yes the case in Western Europe, Americas, and some Asia Pacific. That's a lot of China included there. That is the case. But if you look for places, the other emerging market, like for example, Central Asia, Sub-Saharan Africa, it's clearly not the case, right? So you don't have that investment that is coming from the private sector. It's everything is coming from international. We talk about international. We talk about GFIs here, but the GFIs, like I say, just like I say, the international arm of government. So investing into countries, that's great, but that's never going to provide the money that is needed. So the idea is, how do we bring this private investor in those large investors? And the way investment works, I'm sure a lot of you would understand it already, but allow me to maybe explain a little bit more for people that are not, let's say, comfortable with this kind of jagged investment. Are actually rated, depending on uh, the how attractive they are. So, and they have different credit agency that will do that. A lot of you will know S&P, so Fitch, Moody's. Those are the three main credit agencies that would actually rate those investment, and depending on the rate, be it AAA or go or BB. So if the investment grade, investors will feel comfortable to move ahead. If they're below investment grade, which is the case for many of the investment that are in emerging market, obviously they are seen as very risky, and investors not willing to move forward. So the whole idea about the Green Guarantee Company is to obviously provide those guarantees to be used as a link to drive those investments from global capital markets, especially from an advanced country into the emerging markets, and for money to be able to flow and basically raise the investment grade of those in projects that are actually happening in emerging markets, so that they become more attractive. So that is where the green guarantee is coming and fitting. And this is the first company of the sort that is actually specifically positioning themselves, as a green guarantor, right? So that is, I would say, it's very admirable. It's very much needed. Now, the question that I want us to ask in here, which was for me the central question. So, because we need to make sure that we move things forward. So, the company is saying, according to the declaration here recently, that I think they raised about $100 million, which is great. And from that $100 million, so they can obviously provide guarantee up to $1 billion coverage for businesses. Yeah, so there's a factor of 10 there. That's normal. That's typical. As you can see, if you know a little bit how this world will work, we know a little bit because obviously we've been engaging with 2 to 3 guarantee company nowadays. So we have become a little bit knowledgeable. I wouldn't say that I'm the biggest expert, definitely not, but we have a little bit of an understanding now. So yeah, so what they've raised and what they provided the coverage, it's reasonable. But the question is it enough? So that's the question I want us to reflect very quickly before we wrap up this conversation. Yes, $1 billion pledge is undoubtedly significant, but the scale of the climate crisis, it demands bold and unprecedented action. Yeah, we all agree with that. And given the immense, financing gap for climate-related projects, so in developing countries, so I may want to argue that a larger commitment is necessary. Yes, the company has been saying that they're hoping that this $1 billion can actually quintuple to 5 billion by 2035. But still, I think it's still because if you look at what we were talking about when we were looking at the table showing the climate finance where we were, compared to what was needed, looking at different scenarios, there was a factor of almost 10 in there, right? So this is what I'm saying. I believe a larger commitment is clearly necessary. That's what we should be looking at, and that's what companies should be moving toward. But also, if you pay attention to one of the videos that was there, so the GDC, obviously they can only do that, right? So I'm definitely in no shape or form accusing them of anything. I can just point out some of the, let's say, key questions there, and for all of us to reflect. But I could see that they were still working with the $100 billion promise from, let's say, advanced nation to provide to developing nation in order for them obviously to up the gain. And it's based on that they obviously design their business model. But to basically many accounts, although it's not yet in the official text yet, we all recognize that that $100 billion, although it still has not been fully been met consistently by a nation that obviously took that pledge, you know, it's way too small, right, compared to what is needed here. So $100 billion. So IFC is talking about trillions. That's what they say, trillion. That's what it did, $1 trillion. So per year. So if we talk about $1 trillion, but we're still obviously designing a solution that's based on $100 billion, so obviously there will be a huge gap. So by the time we're adjusting things, so yeah. So the question should be, should it be basically having a large target from the beginning, at the risk of not doing anything at all? Whoa, it's a good question to ask. Yeah, it's a good question to ask. However, it's important to also note that why this is a good step in the right direction. Yeah, it's, to my account, still very timid, especially for such an initiative with, let's say, big backers that we've seen there. So yeah, so I don't know what you think. It's important, yes, to recognize the potential of leveraging as well this initial investment to catalyze, funding from other sources and also unlock further climate finance opportunities. Nevertheless, yeah. So it's still important to mention that uh, we believe that the commitment should be a lot higher there. However, yeah, so we will still find it important to look at the effectiveness of this current pledge and to see what is the ability of the company here to maximize the impact that they can already have, and leverage partnerships, drive tangible outcomes, because if they're able to do that correctly, maybe then that will help to accelerate things moving forward. And this is actually what we're looking forward to see in the near future. So This is probably where I'm gonna stop the conversation. So I like to know what is your opinion regarding this topic of green guarantees. So are you part of the guarantee facility industry? So yes. So what is your opinion? Do you think that the pledge it's decent enough, or not enough, or is it a fake question? We should be looking at another question. If that's the case, I want to hear from you. So that's what I had to say for you today, guys. So hopefully it was good enough informations regarding this topic of green guarantees, and I'm looking forward to hearing from you and see what you have to say. Thank you, guys, and I'll see you next time. Bye bye.